Hello, everybody. Welcome to our Analyzing Finance with Nick live stream. First of all, it's just a major accomplishment to get to 10,000 subscribers. I guess it's not showing up for some reason. Subscribers. Okay, now I think I've got it to work. I guess it's not showing up for some reason. Alright, so now we're live. Welcome to the Analyzing Finance with Nick 10,000 subscriber live stream. First of all, I'd just like to thank every one of you who subscribed to this channel. We've got 12,100 subscribers now here on YouTube, which when I started this a little less than 4 years ago, I never thought I would get this far on YouTube. I kind of did it as a hobby and as a way to kind of just share some of my more esoteric thoughts on finance and the markets that I thought would never be on relevant for my business and my career. So instead, I kind of shared these ideas with YouTube and you guys, and it's become what we now today of Analyzing Finance with Nick. And to celebrate, I'm going to be doing a Q&A. I've already got 9 to 10 questions from people who've asked their questions beforehand. But if you want to ask a question, feel free to leave a comment or a super chat, and I would love to include it here on the show. So without further ado, let's start with our first question that I've got from the viewers. First one is from Atlanta Samurai. You have a lot more of an optimistic view of Japan than most due to AI, which he agrees with. What's your opinion on people forecasting that India and Africa will be the strongest regions in the world geopolitically due to their young populations? And how does AI influence this? Well, this is a good question. And I've talked about this on my video on the economic future of Indonesia, where I call it kind of the AI ladder pole, which is the idea that a lot of these developing countries are at real risk of not moving up the value chain fast enough that they will not be left behind due to AI technology. You have onshoring and robotics moving a lot of manufacturing away from emerging markets to either the developed markets directly or more adjacent countries whose wages are cheap enough to get the job done. That's one reason why Mexico is booming and Poland are booming right now, is due to onshoring. You also have AI and robotics replacing a lot of the lower end white collar labor. So things such as call centers, virtual assistants, and other jobs that were more digital that were being outsourced to emerging market countries are no longer going to be viable to do so. And so as a result, what we've got now is a dilemma here for these countries. It's like you educate all these people, but by the time they finish their university degrees, the world may be so different that they no longer have any sort of line of work to do. So that's the issue, really. What's going on is that you're going to have all these people who are overeducated yet underemployed because AI and robots have replaced the jobs that they would have done, and so you're going to see high risk of revolution. You look at Egypt as an example of this, as a country that has a lot of relatively high education, but they don't really have the skilled labor jobs. So the result is they have a lot of political dissatisfaction, and that doesn't even go to the structural issues about their food supply. If you want to know more about that, watch my video on the economic future of Egypt. But that's the real risk. These countries need to hope that the AI technology evolves a lot slower than many people expect so that they can move up the value curve. And that's before AI disrupts them. Because, yeah, the worst population to have is a population of young people who are overeducated, underemployed. That's what happened with the Russian Revolution. That's what happened with the French Revolution. That's what happens in a lot of places where you have social unrest. The thing is that a young population who has an outlet for new jobs, new careers, and higher living standards than their parents, that's the golden recipe. And that's what worked for the baby boomers in the West and the first wave of emerging market countries in the 90s and 2000s. But I think that the AI ladder pull is a real risk for those countries. So that's the answer to my question. And yeah, and Slevin in the comments kind of explains it in a more blunt way. The next thing we are going to say is number 2. You made a post about how the U.S. government subsidizes pro sports. What role do athletes and celebrities play in the system, if any? Do they have any real power in the class system? Well, the athletes are mainly the interchangeable parts of the broader sports entertainment process. I mean, there are the really elite athletes like the Shohei Ohtanis and the LeBron Jameses of the world who they are so famous and they are so wealthy in their own right that they can be power players. And they could use their influence to impact elections. They can reinvest and develop their own communities. They can do anything like any other upper class, newer old money billionaire can do. So if you are good enough and influential enough, you can have a say and a role, and you do have a role in the system. If you're your average professional athlete, like your 15-point-a-game guy in the NBA or 250 hitter in baseball, no, you really have no say. You're just kind of an actor in the play that is sports. The next question we have is from Mario Parzino 7940. George Gammon recently said, by 2032, 5% of people will have supercars and private jets, 20% of people will be barely getting by, and 75% of people will be broke. Do you think that statement is true? And the question really is that are we going to have a more unequal society but a bigger share of the rich? Because right now, less than 1% of the population has supercars and private jets. If 5% of the population has supercars and private jets, that is a major step up in economic progress. That basically the top 5% of the world's population is, by then, would be 50% of the US and the EU's current population combined. So if half of the developed nations and have that level of standard of living, that's magnificent progress. But I don't really think that is likely unless if they have them in a virtual world. But I think Gammon, who's a libertarian, more economically pessimistic YouTuber, was not really using that as a positive metric. It was probably more the idea that 20% people barely getting by and 75% broke. Well, I think barely getting by and broke are kind of similar. So he's basically implying 95% of people will be broke. And in the US, it's about 50% plus or minus maybe 5 that are effectively just getting by or broke now. And about 35% or to 40 are middle class. 5 to 9% are upper middle class, and then 1% are truly wealthy. So if you want context for what it's right now, that's just my estimate. That's not really something that is like. It also depends on what your definition of wealthy is and cost of living adjustments and a variety of other factors. So in George Gammon's world, there will be more rock stars and winners and more losers. That is a possibility. especially if AI magnifies the few who are creating things and the few who are the owners of capital to really lap ahead that much more. But if you're going to have the doomsday scenario, it'll be worse. It'll be 0.1% having everything, and then another 10% being the middle to upper middle class, and then the bottom 90% being broke. If you're going to go the pessimistic side of AI dominance. Or it'll be like Europe, where the people who are broke live middle class lifestyles due to government subsidies. I think that it's either that, or we're going to have probably a slightly more balanced system just because of demographic trends, in the sense that a lot of people are going to be having a lot less children. So there will be the rate of jobs are going to decline, but I think the populations are going to decline of skilled labor at just as fast, if not faster, of a pace. And that might actually lead to a more optimistic future where the living standards of people born, say, after the year 2010 are going to be much better than people's lives who were born in the 80s and 90s. So the answer to your question is maybe. The next one is from M. Witchener, and he's asking about Steve Keen's Minsky software and how he models inflation. Well, Steve Keen is a heterodox economist, and his specialty is kind of about how the creation and the destruction of debt is what causes economic cycles, and that using MMT could be a solution to smooth it out. It's kind of like a hybrid of classical MMT economics and Austrian economics, if I had to explain the philosophy of Keen. And his Minsky software is the way to use the changes in debt creation, debt destruction to predict recessions. It's an interesting concept. I've never used the software, and it's been out just fairly recently, so it's not... I don't really have enough to say whether it's effective or not, but yeah, I think he's right that debt creation and debt destruction do play a role in the economy. I don't know if he's right that MMT can fix that, or I don't know if he's right that that's the only factor. There are a lot of other variables that are driving the economy, but yeah, that's my answer to your question. Damon Cassidy, who's another good personal finance YouTuber who I recommend you check out. He's appeared on this channel a few times. He asked me, other than providing financial aid, do you see the United States engaging in foreign conflicts in the near future? I think it depends a lot on how this election goes, but I think in general, no matter who wins, the U.S. is going to be less willing to enter foreign conflicts for two main reasons. One, the lessons from Iraq War II just show how politically unpopular such a conflict will be. And on top of that, you have record levels of low fitness and lack of interest in military recruitment and participation. So it's the will to send people out and having big enough of a force to really have a big direct involvement overseas. The capacity is just not there. However, with drone technology, AI, and a lot of other factors, you don't really need as much manpower anymore. Like, I think the future of warfare for developed countries will be sending in more robotic style combat, and we're kind of starting to see a preview of the disproportionate power of drones with what's going on in the Ukraine conflict right now. And the second reason why I don't think it'll be involved is because of the Ferguson indicator. I talked about this in my reaction to Neil Ferguson's paper, Soviet America, I did a few months ago, where this is the first time where the interest on the debt in the U.S. has surpassed the defense budget. And usually when that happens for previous great powers in the world, they are forced to scale down their military ambitions. And if the U.S. is going to have to face austerity for its fiscal policy, it's a lot politically easier to cut defense than it will be to cut Social Security checks or Medicare payments. Britain made this same decision after World War II, and that's what led to the dismantling of its empire. And if push comes to shove, I think that's a likely outcome. And I don't think it's really affected too much on who gets elected. But that's my answer. I don't think we're going to see the U.S. getting involved in conflicts anytime soon, just due to lack of political will and financial constraints. And it's not just because the U.S. has financial constraints, but the other countries of the world who are military powers are either bogged down in current conflicts or have their own financial constraints that are just as big, if not bigger. And so I don't really see war really as the answer, especially with nuclear weapons. It doesn't make sense for geopolitically for two major powers to have direct conflict because it results in the end of all of us. The next question I have is from N714D3S, and he's a guy who works in the Midwest in the commercial real estate acquisitions, and he is interested in becoming involved in real estate development in a warm weather climate that isn't brutally humid. Can you find opportunities in a role in development that do not require a top 50 education, or do you have to pursue an MBA? Well, it depends on what you want to do and how big of the company you want to work at. If you want to work at like a big time white shoe company, that MBA could be helpful because a lot of those firms tend to hire based on prestige of degree, even though in recent years that bias has declined. If you don't mind being a little more entrepreneurial or working at a smaller company in Southern California, there are plenty of opportunities to do that. If you want more specific questions about that or any questions about personal situations, whether investment or financial or just really anything that's more individualist, I can't really talk about that on the live stream or on the air due to compliance reasons. But you could always email me through the email address in the channel if you want more specifics about this, and I'm glad to answer you privately. The next question I have is, congrats, Nick, from Scott Francis 4369. I'm curious, will the U.S. debt to continue to increase at its current rate or will it ever slow down, say in the next 20 years? Well, I mean, it's going to have to slow down because, at least a percentage of GDP, because the current state of things is simply not sustainable. Will it slow down in absolute number in terms of like $1 trillion deficits? Will they be less? There's a good chance they won't be, but as a percentage of the total GDP and the debt, yes, they will go down. They will go down because eventually, as the boomers pass away, the imbalances created by the demographics and increased Social Security and Medicare payouts will balance out once the boomer bulge has kind of gone through the system. And if the debt continues to grow, the bond vigilantes will eventually come out and interest rates will get too high that the government will actually have to solve fiscal policy. The last time you had the bond vigilantes really impact public finance was in the 90s when people were scared of interest rates rising in response to the election of Clinton and deficits from Reagan throughout the 80s. And as a result, you had a balanced budget in the late 90s for the first time in decades. And you could see something like if push comes to shove and the debt crisis gets so bad that interest payments start to, say, like exceed 20% of the budget or 25% of the budget, the market will start to fear a fiscal crisis in the U.S. and Congress will be forced to act. So, yeah, I think that break point is likely to come in the next 10 to 20 years. But honestly, I probably would have said that 10 to 20 years ago. I mean, the ideal outcome, if they want to kick the can, is you get inflation down to a reasonable level, but have the government numbers say it's half of whatever that is. Like the 2010s was a good example of this. You had inflation probably averaging, if you used more accurate numbers, like 2.5% to 3.5%, when the government is saying is 1.5% to 2%. It wasn't big enough of a difference for people to notice, but it was enough to kind of help deleverage the public finances of the U.S. government and just the overall leverage in the economy. The next question I have here is, what are some future business opportunities you see popping up in finance by looking at the progression of fields in AI, quantum computing, etc.? Any tips for entrepreneurs? Well, I mean, with AI, I think the thing is that there's a lot of potential, but people are struggling to figure out how to apply it to their business's bottom line. Like if you could create a software that makes it very easy user interface to help businesses use the AI to replace employees for more repetitive white collar tasks, or build just like the virtual equivalent of a lot of corporate jobs that you have in things such as compliance, such as HR, such as personal assistants, such as middle management, such as accounting, paralegals. There's a lot of jobs that have potentially be replaced by AI, but right now you just have to run random one-off queries on an LLM, whereas instead if you integrated all this into like virtual replacement employee and sold that as like a software to people, say for 5 to 10 grand a year, instead of paying that same person 80 to 100 grand a year, I think a lot of businesses would take you up on that. That's kind of my suggestion, is using the AI potential to automate a lot of the labor force. And the last of the asked questions before I get to the ones in the chat: if the Federal Reserve can just increase interest rates to combat inflation, why can't other countries with high inflation like Argentina do the same thing? And when is inflation or unemployment a serious matter, since it just seems to be the Federal Reserve can just able to balance out whatever it becomes an issue? Also, anything else can you say about social class will be interesting. Yeah, there's going to be a lot more old money videos coming out in the future. I didn't realize that old money was such an interesting topic to the viewers. We're going to do a lot of the geography of wealth series. I probably have at least 4 or 5 more videos on that. We're going to be doing some videos about new money and their political leanings. I'm going to have one about maybe the Ivy League and their role in the old money system. And I'm going to go through some of the comments of people that asked me in the old money videos about more specific niches I would get to. I'm not going to go into specific old money families and their history, because there's another channel here on YouTube called Old Money Luxury, which basically does that. And they probably have a research team that can do a better job and turn them out a lot quicker than me. So I want to focus more on where my knowledge base is in terms of like economic systems and incentives and how that translates to sociological issues, more than just using this channel to be like the historical record of various old money families in the United States and Europe. In terms of the answer to your question about the Federal Reserve can just raise interest rates to solve inflation, well, the question really for that is more of a central bank credibility issue. So the reason the Federal Reserve can raise rates is because they have the credibility to know that if they raise rates, they're serious and they'll hold them up long enough so that they will be willing to choke the economy in recession to keep inflation from getting out of control. And so that's why people trust the Fed to do the right thing. And Jerome Powell, for all the criticism he's gotten and for all that I don't really like about the Fed personally, has done the best job of really any Fed chair in my lifetime. He raised rates to 5% quickly, even though everybody in the financial market is like, oh no, you can't do that. It's going to destroy the economy and the stock market and cause a fiscal crisis. But he did it. He kept them up there for at least a year, which was what was needed to choke inflation. Like I remember when I was talking to my clients about this back when I used to write about this stuff for in my research business, that if the Fed is going to be serious about keeping inflation, Jerome Powell is going to have to keep rates up at 5% for at least 12 months. And he did that. And so as a result, inflation is coming down. The main risk really is the Fed cutting too fast and too early, and that causing a second wave of inflation like we have in the 70s. And we're not out of the woods yet, because housing inflation is still way too high, especially in terms of buying homes. And if you have rates going down, the big risk is that all the hot money that comes from having looser monetary policy is just going to flood real estate again and cause housing, which is the tight supply market right now, kind of like how oil was in the 70s, and that was the driver of inflation. Oil was tight due to Middle East tensions. Housing supply is tight in most urban cities due to bad local urban zoning and development policy. in most of this country. And this is true for most of the Anglosphere and a lot of other countries in the world, particularly in the Pacific Rim. And the problem of that is that if all that money just flows into inflation housing, people are going to just bid up real estate again. And then people have to pay higher rent. They're going to demand higher wages. Or if they want to buy a house for a new job in another city, they're going to have to pay a higher price and therefore demand higher wages. It creates a price-wage spiral, except instead of due to gas prices like it was in the 70s, it's going to be due to housing. And that's the main risk. So that is the main concern. But I think that Powell did the right thing, and that's why people trust the Fed, and that's why inflation comes down when the Fed raises rates, because banks and businesses tighten their belts when it comes to lending and borrowing. In a country like Argentina or Turkey, where nobody trusts the central bank, that doesn't happen. They have to raise rates and hold them up to a painful level for such a long time because they don't have that credibility. Because in the past, whenever rates go up to a point that actually chokes the economy and causes a recession and job losses, political forces in those countries force the central bank to cave. And so as a result for that, you have waves of inflation because the people pull they exchange their currency for hard dollars or hard assets, and that causes the currency to go down and it becomes a spiral. So it's really just a matter of credibility. The banks that have the most credibility in the world don't have to raise rates the most. And you see this, like the Fed is rarely regarded as fairly highly credible. The ECB, for all of its flaws, is still fairly credible. Then after that, it's probably the Bank of England and the Bank of Canada, the Bank of Japan, the PBOC. And then within the emerging markets, it's Mexico probably has the most, and Malaysia probably have the strongest credibility of the central banks. So hopefully that answers your question. Now that all the pre-scripted questions, I'm going to go through the chat and start answering the questions that are in the chat. And if you want your question answered, please feel free to write it in the chat. And I will get to it. And I'll keep going until I answer all your questions or until I get tired. And if you like what we're doing, please share our work here. You join our Substack mailing list so you can get direct email updates from me for new videos, live streams, or any other projects I'm doing on or off YouTube. Yeah, stay tuned. We're going to be doing a lot of new interesting developments with Analyzing Finance with Nick in the future. Will the German economy recover soon? The G. Daniel asks me. I mean, in the short term, it could recover just through easier monetary policy and a cyclical recovery after what I think is going to be a recession for the next few quarters in the U.S. and developed world. Long run, no, they're not going to really be able to recover and be the leader in Europe because their energy policy is messed up. And I talked about this in the economic future of Germany. You are a country that doesn't get much sun and doesn't really have either the political will or the raw amount of natural resources for energy to extract themselves, and you cut off your biggest supplier due to the conflict out there. You've got a problem. They have, even before Ukraine, they had the highest electricity costs in the world. And it's hard to be a dominant manufacturing power and be involved in very high energy intensive AI work if you have overly expensive electricity. Like the electricity costs, I think, are almost double the United States, and it's much higher than their European rivals. And Germany is not going to be able to use green hope to solve this. Like they need a viable energy policy if they want to be competitive. And until they have and given the political will and the fact that young Germans are overwhelmingly supporting the Greens or the AfD, and neither of them really have a good solution for this, I'm not very optimistic on Germany as a result. The next one is, do you think we will get a communist adjacent ideology from Slevin. We kind of already have a lot of those in far left political parties across the West. I don't really know more detail. I need more detail on what that is so I can answer that question. I mean, every left-wing agenda really you can summarize as I want to redistribute from those who have to those who have not. And in economic issues, that's hard cash. In social issues, that's more social status and prestige. Like, if you look at it from that perspective, a lot of the social liberal policies make a lot more sense. From Sam, well, do you think the act of owning capital was actively discouraged over the last 50 to 100 years? Everyone owns the latest tech toy that becomes worthless each year. Few people actually own capital. No, I don't think that's true at all. I mean, you've had a lot of policies that make it easier to own capital, particularly real estate and stock market, where transaction costs for the stock market have gone down exponentially since the 80s. You have people like promoting things like Robinhood and stuff like that. But I think that they're trying to encourage maybe say more speculative activity. But no, I think and looking at the percentage of Americans who own stocks, it's near record highs right now. So I don't really think it's been encouraged. Unless, if anything, it's been encouraged for people to own capital, particularly by the people more on the center-right side of the aisle, because they feel like if people own something in society, they have skin in the game and they're less likely to rebel. So, no, I kind of disagree with your premise. Like, 50 to 100 years ago, maybe people owned farms, but those farms weren't really worth as much as they would be today, that same amount of land, due to higher crop yields. And they did not own really that much capital. So I disagree. The next one is, would you say single-person business will be the new norm, especially in the incoming AI revolution? As somebody who has been a single-person business in the past, yeah, I think they will be the new norm. If they already are the new norm, there's a lot of single business. That's kind of if you own businesses. Some of them do it through a platform, and we call it the gig economy, but there's a lot of people who are doing things, whether it's CPAs, private practice psychologists, private practice attorneys, private practice doctors, etc. And so there's plenty of examples of that. And I think that will become more common, not less common, in the future, because AI and technology will make it so you need less employees. As an entrepreneur myself I've been in the working world for, I don't know, let's say I age myself, almost 15 years now. And 11 of those 15 years I've been self-employed. And so based off of that, I was able to do a lot of things with just one man or just one business partner that I would have needed 10 to 20 people to do before just the advent of the internet and Web 2.0 software. And you're just going to be able to run much leaner companies. And I think this is a good thing because it lowers the barriers to entry for entrepreneurship. So, yeah, I've got a super chat. It's from David Isaac. It says, I understand why you don't like financial nihilism, but how can young people with a lot of debt succeed in the techno-feudal world we're entering? Well, first of all, you got to get out of debt. And if the thing is that the social stigma of living with your family has lowered quite a bit. So there is a way that you could save a lot on rent if you have a lot of debt by doing that, if it's an option and if there are sufficient job opportunities in your hometown. I think the longer term thing is entrepreneurship of some kind. Maybe you have to do it on the side and do it as a test of viability first. Like, I don't recommend people quitting their jobs and starting their businesses until they've built 3 to 5 years experience in the working world, so they kind of have an idea of how things work and what value they can provide in the value chain in the profession that they are interested in. However, I think that you could, depending on the industry and how regulated it is, you could always start your business as a side one, and once it gains enough revenue that you can quit your job, go ahead and do that. Or you can use that to pay down your debts. You can move to lower cost of living cities or places that pay higher. Like the world has gotten more efficient on this. Like 10 years ago, there were cities like Miami, Atlanta, Dallas, and Metroplex where you had almost California level wages, but at the fraction of the cost of living. But now that's kind of evened out to agree. Like I think every city that's big enough to have a Major League Baseball team will have a pretty similar cost of living within 10 to 15 years. Because if you have that level of cultural amenities and the internet cheaply moving around and have businesses be able to move relatively quickly, the labor market is semi-efficient. So it will eventually correct in that way. But yeah, I mean, and also if you're worried about the techno-feudal wars, you need to be the one leveraging technology on your side rather than being your employers or your rivals leveraging technology against you. Yeah, I mean, the debt part makes it hard. Like if you have no debt, really, is that you just spend time figuring out what you want to do, work a job for a few years to gain some experience and 2 to 3 years of savings, and then go out and pursue your entrepreneurial passions. And if you're not entrepreneurial, then you just try to have a higher savings rate than your peers and pursue the FIRE type. Well, not really FIRE, because I'm a critic of FIRE because it basically relies on you never having children to be successful. But you know the idea. You save more than your peers so that you don't necessarily have to retire early, but you have the option that you could take a year or two off work before you decide what your next pursuit is. Or you can take that year or two off to start a business or do whatever you want to do, that you're not basically chained to a desk, metaphorically. Hopefully that answers your question. So back to the chats. Would you say, okay, what question would you have for one of your financiers if they were accessible to you? I actually have a funny story about this. One of my mentors, I'm not going to reveal his identity because he's a very private person I met while I was in university. I saw him 10 years later from the country he moved to from America. And just the reassurance of saying, letting me know I was in the right track really meant a lot to me. And yeah, that's kind of the thing you want your mentors, just to kind of reassure you that you're on the right track and what you're doing makes sense. I would ask, like, how do you, which is one of the tricks in finance really I've kind of struggled with, is how do you have strong views but lightly held? Like, I could sometimes get stubborn and have a certain view of something and I won't change it faster than the market conditions change. And so I have risk management reasons not to trade it, but it kind of makes me slow to change my mind on things and therefore change a lot of my investment decisions or other things like that. And that could be a challenge. Other ones has AI and a lot of the zero DTE, how much does that really have an impact on the market? Like, do we need to be more technically focused in terms of investment decisions, or does this benefit the longer term time frames who have, quote unquote, I'm going to use a crypto terminology, more diamond hands and could buy quality stocks or quality bonds and just hold them? Is it? And then also, how do you spot the next thing that's going to capture the public imagination in terms of investment trends? Because you can have a good idea of sound fundamentals, but you need the narrative to change, and the signals for that are sometimes difficult to spot. Next question, what would you do with $130,000 as a 25-year-old? Well, I would invest it. And if you want to talk more about that, again, you could contact me privately, but there's ways to do that. However, if you want, it also depends what your goals are. If you want to pursue a business, that could just be your buffer that you can burn while the first few years you're not going to make money. Because if you're an entrepreneur, just I'm sorry to break it to you, but you're probably not going to make a profit net of living expenses the first year or two of your business. So you could use it for that if you have a goal for that. I don't know your whole situation, so I can't give you an answer. So if you want to elaborate more on that, contact me directly. And then let's see. And then the next question we have, is the financial future of Australia. I did a video about that on the economic future of Australia that I reacted to a Caspian report video where I discussed the view on how Australia is realigning its economy because they were reliant too much on China importing raw materials, and they value their strategic alliance from defense perspective with the U.S. over the trade relationship with China, and that was going to result in some growing pains, which likely can include some sort of housing correction and a recession to realign Australia's economy to less dependent on commodity exports and more dependent on internal consumers, or creating other goods and services of finished goods or products that the rest of the world would want in addition to just iron ore. Because even if things were good with China, eventually China's great build out is going to be finished, and China's just going to be maintaining its existing buildings instead of building new cities from scratch. So they were going to have to do this anyway, and I think they're going through that process right now. Gold versus platinum as a storehold of wealth. Well, they're both better than Bitcoin. I mean, probably a lot of my subscribers are going to hate me for saying that, but that's the first comment I'm going to say. And the second thing is gold, I think, is probably better as a store of wealth because you have more central banks buying gold. And platinum, a lot of the big end users are catalytic converters for cars, and the way that cars are being built, they use less, I think, platinum, especially EVs, than previously. And so it makes it a lot more volatile because it's a more industrial metal. So if you're doing it for a store of value, gold, if you're doing it for trading, platinum can make sense in the right circumstances. But I'm not going to be really talking about, trading commodity futures on this video. And as a disclosure, nothing in this video is investment advice. Please do your own research or hire an investment advisor. Everybody's situation is different, so yeah, I'm not going to be, nothing here is that. And yeah, Nero Poster, thanks for watching this wild work meeting in the office. I appreciate the support. Then the next question, let's see, that I have here is, I think some got skipped. What countries in Europe do you think will surprise positively, negatively in the long term? This is a tricky one. I think that one has potentially surprised positively be the UK. The UK's current trajectory is sinking into like borderline third worlddom if they keep running the country the way they currently are. But if they simply just make a few simple policy fixes, they can be on the right track. Like Brexit could have been a real opportunity for them to get off the sinking ship that is the EU and be a good trade partner for Europe and a gateway for other countries to do business. But so far they haven't really lived up to that potential, especially due to how relatively weak the Conservative Party had been in the UK. But that's one to possibly look at for the positive surprise. Spain is another one. Like if Spain had less barriers to entrepreneurship, they can become like the Florida of Europe. They have the weather. They have a culture that's appealing that retirees want to move to from other parts of the continent. And the work remote people would like to live there too. Portugal is similar, but they just have a lot of restrictions really to business and entrepreneurship that make it, and high taxes that make it unattractive for economic development there. I mean, and Italy is a similar story, actually. Those ones have potential upside, but they're going to have to do a lot of policy changes. I think Spain and Portugal have more potential upside than Italy, but yeah, downside, is countries. I would say Germany, but that's not really a surprise based on my views on that. I would say others that may have potential downside. I don't know, because it's already, expectations are so bearish. Belgium, if I think as another surprise downside, they could join the pig countries given their debt situation if they're not careful. And if the EU doesn't consolidate and Belgium doesn't become like the Washington D.C. of the continent, then they might have some trouble. They're also surprisingly like one of the highest tax burden countries in the world, especially if you exclude Scandinavia. Those are Germany and Belgium, probably the ones, if I had to say, for surprise downside. The thing is that people are so pessimistic on Europe right now. There's not really that much surprise to the downside. The other thing is, do you have things on why nuclear is not in use on a wider scale? Well, because if countries develop nuclear in a way that the great powers find a threat, they risk being sanctioned and cut off from global trade, and that risk is not worth the benefits of nuclear technology and deterrence. Have you looked at the financial balance sheet in NVIDIA, and do you think that they're engaging in financial fraud? I'm not going to be commenting on single stocks on this live stream, so I'm going to have to skip on that question, but I haven't really seen any indication that there's any fraud at NVIDIA. Next thing I would say is, let's see. Let me see if I have some other questions here, because this thing skips around a lot. What do you think about the take on no federal tax on overtime? I will get into that in tips, but I think even though I like lower taxes in general, I think this is a bad idea to segregate income this way, because if you say do no taxes on tips and no taxes on overtime, you're going, what the effects are for the overtimes that you're basically just not going to have overtime anymore for a lot of, wait a second, never mind. I was thinking like, actually you would probably have a lot more people want to work overtime, and the result of this is you'll probably have people working more hours and then therefore less people employed. If labor is a issue, like if high unemployment, that could cause unemployment rate not to come down faster, because instead of hiring an additional person, people would rather just work longer and get that overtime pay without taxes. The other thing is, will that proposed tax, no tax on overtime, apply to payroll taxes for the employer too? I don't know the answer to that. I haven't looked into it, but if it does, that's going to incentivize employers to put people in overtime instead of hiring new people, because they don't have to pay payroll tax, especially for jobs that pay under the Social Security maximum. In terms of the tips, I think that's more clearly a bad idea, because that's going to try to force more people onto tips, particularly working class people, than on regular wages. And if people think tipflation's annoying right now, with every iPad in the world trying to get you to pay an extra 25% for your coffee at Starbucks or getting takeout, it's going to be even worse, because the employers will just try to pay as minimum as they can, and the employees will actually go along with it because they'd rather be paid in tip than regular income, and then they're going to try to shame the consumers to take the bulk of their salary through tips. I generally don't. I mean, I think the overtime one is probably fine. It's a good and not a bad idea. I think that the tip one has some potentially dangerous incentives, but again, I haven't read too much into them lately. Let's see. Other questions do I have here? Why do you think there'll be a recession soon? And do you think unemployment will go up substantially in the U.S.? Well, I recommend watching my video that I did on the state of the American consumer back in July. if you want to know more of the answer for that. But the thing is that what happened over the last couple of years is you had the price level rapidly shoot up for a variety of reasons. And even though government data claims that a lot of the wages are catching up, like outside of the very low end skilled, unskilled labor, they really haven't, particularly for more white collar professionals. And so the result is a lot of consumers feel crunched. Like if they're spending a greater percentage of their paychecks on necessities, and you see this with credit cards, consumption and credit card delinquencies going up as a sign of the strained consumer, and signs of just tightening lending standards and things like that. You have people are simply just not going to be able to spend like they were when they had stimulus money or when the price level was lower. And that marginal decision, like, hey, we're going to have a cap on, say, $100 a person for Christmas this year instead of $200 last year. Or we're not going to do that vacation to Europe next summer. We're going to go to a place so we can do driving distance. Like, those marginal decisions are enough to cause a recession, because recession is simply a contraction of economic activity. So the result of that is why I think there's a risk of recession, really, is that just the consumer is just too strained given the high price level of the economy, and they're going to cut back, and that creates a chain that just has overall economic activity decline. And then unemployment will go up substantially. I think it will go up, and it already has come up quite a bit the last 12 months. It was like in the low threes, and now I think it's about 4%. But I think unemployment rate will rise slower than in normal recessions, just given the tightness of the labor market from boomers retiring and not as many young skilled labor to come and replace them. And since the boomers are retired, they're not dead, they still consume. And so they need the same amount of services, and there's less workers to produce them. So in the short term, especially since AI is not really ready to replace all these people yet, that means that labor demand will be high enough that I don't think you're going to have big of job losses this cycle as in previous ones like 2008. There will be job losses. It's more likely to happen is that you have pay cuts, whether nominally or real. Like you have inflation and people just don't raise pay. And if that effectively is the same thing, like if you have, say, for example, the collective, and this is how they do it in countries like Germany, where you have, let's say, the economy has the workforce has collectively a 5% or even a 3% wage cut. That's the same thing as the unemployment rate going up that amount in terms of impact of lost wealth in the economy. So that's my comment on this. What do you think the role ESG has in reshaping institutional investment flows, especially new regulatory pressures in US and Europe? I did a video on this with several years ago, a reaction to Felix Rex, where I talked about ESG. And generally the thing that most investors care about who are really into this is the E part, environmental. And as you've seen what's happened with a lot of clean tech stocks and solar stocks, and how energy stock has actually performed relatively well since 2021, hasn't really worked. Like, people are starting to rethink investing based on the E part of ESG. The S part is the controversial political part, because the S is like, what is determined as socially responsible? They get a trend in the 90s that like a lot of religious groups and other do-gooders are like, hey, we don't want to invest in cigarettes or alcohol or gambling because it's not in line with our ethics. And these things become really popular in bull markets, because when every stock goes up, it really doesn't matter which. You can have the luxury of picking things based on your values. But when you have a bear market or a lot of dispersion where you don't have the serial positive correlation, then stock picking matters again, and you don't have the luxury of investing on an ESG style just because it it's going to hurt your returns and your clients will not be happy. And then the other thing is the G part. I think investing based on the G part of ESG is smart because corporate governance does have a material impact on returns. A company that's poorly managed in the long run is not going to perform as well as a company that has good corporate governance. So, and the smart ESG investors that I know, like I have a friend of mine who's a really sophisticated fund manager who does invest in ESG strategy. His main emphasis is on the G part of ESG, and that's why it works. And then and I think it's going to impact Europe more because Europe is more true believers in ESG than the U.S. I think the U.S. it's just going to be like a fad that comes in and out every few bull markets. The next one I'm going to say is do you personally / business use banks, or do you prefer Fidelity, Vanguard, etc.? So are you asking like, do you use banks or brokerage accounts? Well, you use both. They're for different purposes. Like I guess Schwab technically does have a checking account that you can use, and I used to use that when I lived overseas because they didn't have foreign transaction fees. But yeah, I mean, I think they use both. So that's my answer for that. Let's see if I've got any other questions here. What could cause a collapse in gold prices? Okay, there's really a simple thing that could cause a collapse in gold prices, and that is positive real interest rates for a sustained amount of time, or just a trend of interest rates rising faster than the rate of inflation does. So say, for example, let's say the Fed hikes rates because housing is causing inflation, and that would be bad for gold because let's just say the inflation increases from 3% to 5%, and the Fed increases interest rates, say, from 5 to 8. On a percentage basis, that would be a higher amount, and that would be very bearish. Or it doesn't even have to be the result, just the fear of that possibility would be enough. Or if economic prosperity, if things are going well in the economy, gold tends to do bad. Like the golden age of my lifetime was the 1990s, was possibly the worst decade for gold. And so, yeah, that's kind of my view on that. That's the bear case for gold, is that if bonds become way more attractive, like the reason why gold did so well in the post 08 and 2021 is doing well right now is the combination of economic fear and the idea that people think that inflation is going to rise faster, whether the official number or the actual number, than interest rates do. And interest rates are going down right now. That's what's happening. But that's kind of that's your answer. Is like a positive real rate environment is the bearish environment for gold. Any positive expectation of Africa? Yeah, well, Africa is a lot more diverse than people give it credit for. There's 50 countries in Africa. Africa has very different cultures, very different religions, very different economic and social structures. So, that's like saying, am I bullish on Asia? No, you have to split it up. And certain countries, I think, have a lot of potential, and others don't. The problem is the countries that are the weakest in Africa tend to be the ones with the most liquid stock exchanges, or the ones that have ETFs in the U.S. The African countries that I think tend to have the most problems, Egypt, South Africa, Nigeria, are the ones I'm not so hot on. Other African countries like Morocco, Kenya, Botswana have a lot of potential. And Ghana too. Like, the problem is, like, to invest in these places, they don't really have much public markets, or if they do, they're very thinly traded. And so you need to either be like a frontier market expert and just do this for a living, or you need to find a private equity fund to invest in with somebody who knows the languages, the cultures, and the local politics. That's not something I do. And since I don't really have those capabilities, I don't really pay attention to Africa from an investment perspective. Economic future of the United Arab Emirates. I might do that video in the future. I'd have to do some more research on it. What they're trying to do with Dubai is try to create a way to diversify away from the wealth of Abu Dhabi oil. And whether it's successful or not is to be determined. But I'm not really informed enough about the UAE's economy to really give you an educated answer about that. Let's see. Is renewable energy growth stalling? No, it's not, actually. I mean, like, maybe in terms of, like, investment yield, maybe. But it's, like, solar continues to grow. And you look at the history of energy, I saw this really good chart that explains it, is that we burn the same amount of wood that we did like 200 years ago when wood was burning was really the only type of energy. We burn the same, like the only energy source that we've completely gotten rid of that we didn't use since the dawn of time was whale oil because of the risk of putting whales extinct. But as solar continues to grow and other alternatives, they will grow maybe as a percentage, but I don't think the absolute amount of oil or natural gas will ever go down. But yeah, I think growth is slowing, but they're still growing. A lot of the easier to tap areas for solar have been tapped. But yeah, also a lot of their business models are based on government subsidies and policy. So the profitability of solar may not necessarily correlate the growth. Kind of like what railroads happened, is that when all the railroads were built, they grew a lot, but they weren't necessarily profitable. Same with the infrastructures of the internet. So yeah, I'm not going to comment on my opinion on the investment of solar one way or the other. Again, I don't talk about specific investments or specific stocks or anything like that on this channel due to like just the nature of my career. But yeah, I'm just going to leave it at that. What impact will the BRICS nations push for de-dollarization have on a global currency markets? Well, it's not having that much of an impact. For all the news of Saudi leaving the petrodollar, they're still pegged the real to the USD. They would, if the only real way that the US is going to get dislodged as a reserve currency is if somebody creates an alternative that is harder and more credible. And the only way a currency can be harder or more credible than the US dollar is if it's pegged to gold or some other real estate or some other physical commodity. And yeah, if China buys up enough gold and creates a gold-backed RMB, then that could do it. However, they probably need to buy 8 times the amount of gold they have in order to do that. So that's what makes it tricky. And they could do it, but that's the playbook. If you want to watch that, just look if these countries build like a collateralized currency, because that's what it will take for people to trust it over the dollars having more collateral. Next one is, what is your thoughts on Argentina's President Milei? How does he fit in with the establishment elite versus the counter elite? Can we see something similar happen in the U.S., Europe? Well, Argentina doesn't have that establishment elite versus counter. That's a U.S. unique structure. Most of the world doesn't have strong enough of a new money social class or enough economic freedom to allow such a counter elite to develop peacefully. And you can watch my videos about the authoritarian, the emerging market, and European social models on the Old Money playlist if you want to know more about that. So yeah, he doesn't fit in because Argentina is not on that model. What I think of him, I think he's doing a good job. He is doing his best to first fix the problem of the debt, and he's made a lot more progress on balancing Argentina's budget than many people have hoped for. And dollarization, I still think he needs to do it. The challenge is that can he survive an election? Like, there's going to be negative economic consequences in the short term for Argentina doing all this stuff. And if he could survive and get reelected, then dollarization can fully commence. Argentina can fully make itself more credible to foreign investors, and it could really be one of the great economic boom stories of the rest of this decade in the 2030s. So that is my view on him. I really like what Milei is doing down there, and hopefully he can fight the Peronist instincts that the Argentina electorate has so that he can finish the job. Is negative income tax a good idea? It's kind of like UBI, and no, I don't think it's a good idea, to be quite honest. I mean, it's better than current welfare systems, but yeah, it still isn't, and it's still kind of, and it's the fact that negative income tax, it goes down as your income goes up gradually, so it doesn't create the cliff, which is the problem with most social welfare systems now. They have the welfare cliff. But I think that the idea that people can get paid to do nothing is a major societal problem, not just from an economic view, but from a moral hazard perspective as well. I might do a video on it because I need to do some more research on the negative income tax to have a more full thought out perspective. What a good backed currency, you mean a gold backed currency? Yeah, I mean, I think it could work, especially in the age of like digital currencies where you don't have to physically move the gold hands. You keep it in just like one safe and just have it as ledgers. So yeah, I think it could work. There's Triffin's dilemma where the economy can grow faster than gold supply. That's the main argument against the gold standard. But then you just have to have a society that permits deflation, and sticky wages is the main challenge for that. But if you can educate people, understand that like if your wages go down less than the prices of things, you're still better off. Like one of the most prosperous points of America was the late 19th century, where the price level dropped, wages dropped, but standard of livings shot up because of this very phenomenon. And no, deflation is not evil. Deflation is only evil because the government is the U.S. government and major governments in the world are the world's biggest debtors, and debtors are the losers of deflation. If you are a saver, you win from deflation. And you probably can tell I'm very pro-saver, and I'm generally hostile to leverage and people borrowing too much money. And so that might be my personal bias in this. So, but no, deflation is a good thing as long as it's deflation created from the market making things more efficient and cheaper, and not deflation created from people defaulting on their debts. Let's see. What welfare system would you make, or would you scrap the welfare system and state instead? Well, I did a video about this called Alternatives to the Welfare State, and I think I did it about 6 months ago. I recommend you watch that, but I would localize the welfare system. Some of it can be privatized in the form of like insurance, like unemployment, I think could be like an insurance product. Other ones that you can, other things have to be more on the community level. Example would be, say, like instead of having like a social welfare done from top down from the state, everybody in a certain community, whether it's like a church parish, whether it's a university alumni club, some other interest group that people sign up for, everybody in the local community chips into that. They have to be interviewed and vetted so people know who they are, and then as a result, when anybody gets in trouble, that community pool will be used to support them and help them get back on their feet. And since the people know them personally and there's a private incentive to get somebody back on their feet because you keep burning funds if you don't, it's a good alternative in theory. That again, I go more of this in the video and I don't have all my complete thoughts on here, but that would The downside is there's potential corruption for that. So you would need to have that type of system heavily regulated. It kind of, because if you didn't, then there'd be a lot of potential fraud. But if you want to know more about that, watch my video. I explain it a lot better. Let's see. Will a declining population lead to long-term market stagnation? Like, is the S&P a good long-term investment for young folks? All right, I'm not going to talk about my view on the S&P 500 on here. If you want to know that, you could contact me privately. Will a declining population lead to long-term market stagnation? Not necessarily. It's if you need to have productivity grow faster than the population declines. As long as GDP per capita goes up, your society is becoming more prosperous. And that's the mistake people make. Because, we can solve growth by just importing a bunch of immigrants to raise the population. If they're not as skilled or they don't culturally fit in to the place you're bringing them, it's not going to be an asset. So that's the problem. Like, just adding more people is not going to solve the problem. You need to increase per capita GDP. And as long as you do that, you have a prosperous society. Japan will be a good experiment for this because they've decided to embrace automation and robotics in a way that they are increasing their productivity even in the population is declining, so their economy is not stagnating. And if the Japanese model succeeds, that could be the model for other developed countries who are facing demographic inverted pyramids in the future. Isn't some amount of money printing necessary? Elastic money supply says to expand money supply when the economy actives. Well, the money supply naturally does grow with the economic activity growing because of the money multiplier effect in the banking system. So you don't really need the government to spend beyond its means to do that. And how do you facilitate trade without enough currency? Currency is really just a proxy. In terms of like currency, it's just a proxy for the amount of value in terms of goods and services in the economy. And money is created again through lending in the banking system. Let's see. Why are you so bearish on crypto? I understand it doesn't have any intrinsic value, but why are you so bearish? Well, watch my video on crypto. It doesn't have any intrinsic value. That's why I am bearish on crypto. That explains it as simple as that. Bitcoin has better marketing and was around longer. So that's why some people think it's different and unique. But really, in theory, I could create a coin, call it Nick Coin, and market it a lot. And if it gets some traction, it will have value, even though it's really just a few lines of code that I paid some developers to make. And the fact that the altcoins have value kind of proves my point that there is no scarcity really in crypto. Like, if the crypto people are right, there should be only one coin with any value, and the rest of them should go to zero. That's what it needs to have some intrinsic value, honestly. That's my view on it. However, the thing I could be wrong is that it kind of develops a cult like gold bugs have with gold, in the sense that people just believe it has value just because, and a generation, like the millennials, have just completely bought into it, and that might hold it up. And also the things that Bitcoin and crypto is heavily correlated with the NASDAQ. It's like, if you look at a chart with 3 times NASDAQ levered with crypto, it lines up pretty well. And that's also what makes me skeptical. I think it's a vehicle for speculation, and it works for that because you have no cash flows, so therefore you're not really judged on earnings or any performance. There's no interest payments, so you can't really price it as like a perpetuity or a multiple based or on the going interest rate. And it has no physical tangible end use like a commodity, so it's really up to the human imagination how high it can go, and up to human despair on how low it can go. So it's perfect for speculating, but it doesn't really have any intrinsic value, which is why I am bearish on it. How much gold would America need to get to be back on the gold standard? Well, you need to have gold be at least, you'd have to have enough gold to have at least worth M1 and M2. I haven't ran the numbers on this, but I think gold would have to be at least $6,000 to $7,000 an ounce. $6,000 to $7,000 an ounce before you can even consider it. But again, I would need to run the ballpark. I would say 10,000 plus an ounce, but it's just a guess. I'd have to do research on it. I'm sorry that I'm saying that with a lot of these questions. I wasn't prepared for them like the ones that were pre-written, but I'll do my best. What will happen when Social Security goes belly up or cities like Chicago go bankrupt? Yeah, Chicago has been on the verge of bankruptcy for at least the last decade. It's really sad because Chicago's an awesome city. It's just mismanaged and it's too cold in the winter. But what's going to happen ultimately is they're either one of two things. Either one, the federal government bails them out because Illinois is the most unfunded pension system. They're not going to have the cash to do it. Or if the government doesn't bail you out, then what you're going to have to do for Chicago is that they're going to have to do what happened with Detroit. They're going to have some form of Chapter 9, even though I think municipalities, it's not entirely, there's some legal restrictions there. They'll have to have a bankruptcy and just cut a lot of their obligations. I know the pensions are constitutionally protected in most states, but what cannot be paid will not be paid. It's just the mechanics of it are tricky. And like that's why a lot of people think ultimately the feds are going to bail everybody out and that's going to result in more inflation, because that's usually what governments do with these problems. But that's a tricky situation. Either way, the real value of those pensions is not going to be paid, whether it's through cheaper dollars, through inflation, or default. And then as Social Security, it's a similar story. I think that they will not default. They will print the money if they have to, or they're going to raise the retirement age by a few years, increase the maximum income for it. Because Social Security, I think there's a maximum income of around $120,000 a year, and above that, you don't have to pay any more payroll taxes. That could be changed or scrapped entirely, or the payroll tax will have to go up. So with Social Security, you could tinker with one of those three things: retirement age, the payroll tax level, and the max, and it could get rebalanced, especially as the boomer bulge in the demographic pyramid goes through the snake. So yeah, I'm more optimistic on Social Security than I am on Chicago. Thoughts on the Canadian economy? I'm not really that positive about the Canadian economy unless if you have a major commodity boom. Canada issue is that, and I talked about this in my video, The Economic Future of Canada, which if you haven't seen, Justin, I would recommend you watch it, is that they're kind of a rentier society. They want to basically build a society where they can just live off of the royalties of their naturally endowed resources, land, minerals, oil, etc., and not actually have to produce any value add. Whereas the U.S. has done a lot of beneficial things in terms of technology and real world businesses and manufacturing and things, where Canada's agricultural goods, Canada's lagged behind on that. So like their whole economies, they bring in immigrants to keep the housing market afloat. Housing prices keep going up, and so that encourages more development in real estate, and the increased rents that people pay and the inflation for that counts as GDP. And then you have all the royalties they get from mining and oil and wheat in Alberta or whatever, and that Canada is basically just selling its resources to the rest of the world, whether it's its real estate or its natural resources. And that can only last for so long. It's a giant Dutch disease problem. That's why Canada's lagging, because their cost of living is really high and their wages are 2/3 that of America. Like, if Canada was smart, they would encourage businesses in America to have remote work staffs in Canada because they're similar level education as Americans, but they work for a lot less money, and there's a big labor arbitrage there, but that's not really what they're doing. And so Canada needs a correction in its housing market to stabilize things, or natural resources to go up a lot, or reform their economy to be more competitive in higher use end goods, not just raw materials. Any thoughts on the Australian economy? I talked about that earlier. I think I'm a little more optimistic on Australia than Canada. I'm going to have to take a quick break. I'll still leave the live stream on. I'm just going to grab a glass of water because I'm losing my voice. All right, that's better. Okay. All right, back. Fan meetup in Australia. I've never been to Australia. I would love to do a fan meetup in Australia. If I had at least, say, like 20 people who are willing to meet me in Sydney or Melbourne for a fan meetup, I'll go. So that's my challenge to you guys. I know I do have a lot of subscribers in Australia based on the analytics, but I don't know if I have enough of them in the same city who are willing to meet at the same place. But I think I want to do generally like a world or a national tour. And if anybody who I would get enough people in the same city, I will host a meetup. I'll post like a survey in the Google Forms when I'm more closer to doing this. But that's one of the perks I wanted to do when I got to 10,000 subscribers, was to start doing meetups to cities where I have a concentrated amount of people and get to know all you guys, because I think that'd be very fun and it would be a really unique way to travel. What the next question is I have on that is basically, how is your subscriber base distributed geographically? I don't know the numbers now because we've got such a surge recently, but before we went up from 2,500 like a month ago to 12,000 now. It was about 50% in the eastern half of North America, US and Canada, about 25% Europe, like another 20% western half of North America, and then 5% elsewhere. When it comes to that's my distribution. And in terms of cities, like the most popular cities are New York, Los Angeles, Chicago, Toronto, and London are my top 5. And then after that, I think 6 through 10 are like Melbourne, Seattle, San Diego. I don't remember the other ones off the top of my head. I think it's like Sydney and Dallas. But yeah, I also noticed that, and so that's kind of, and then my biggest non-English speaking countries are Germany and Portugal and Serbia, surprisingly. But yeah, we have people all over the world. I'd love to come to Madrid. I went back there in 2016 and I had a great time. I'd go back. Anglo World Leading makes sense just because this is an English-speaking channel. Singapore actually has a pretty big audience too. I forgot about them. And then in terms of what industries think are going to run the 2030s, Biotech, particularly longevity biotech, I'm pretty bullish on. I think real estate construction and development is going to be a big one because I think a lot of the NIMBY stuff is going to go away. There's going to be a lot of catch-up development in a lot of the West. Then other things I think will do well. There's a lot of AI and robotics, particularly humanoid robots, replacing a lot of the working class manual labor jobs. That's going to be a huge business. Video games is another one I think that's going to continue to grow faster than the economy. And and then YouTube as well. And there's a lot of things. And then infrastructure development. And then, does your work allow you to travel a lot? Well, I own my own business. I can travel when I want to, but like I am busy building a company, and that's my first priority right now. And so I can travel when I do try to take a vacations like a few times a year. But my main focus has been on growing the company, and it makes sense often for me to be here, but I would like to expand my client base beyond the West Coast of the United States. So when I have the opportunity to do that, I will travel to those places. And also, what would be more fun vacation than meeting a lot of my YouTube fans? So I travel on average one overseas place a year personally, and one new place in North America I haven't been to. But that varies year to year. Like the last few years I've been hunkering down relatively because I've been busy with the entrepreneurship life. Where do you see the housing market going over the next few years? I think it's going to either decrease nominally or in real terms. I think that housing will go up less than wages over the next several years because the current price levels relative to incomes are just simply unsustainable. And I think housing supply will catch up, especially as the boomer NIMBYs die off or stop voting. Like if you look at over 2/3 of the U.S. housing stock is owned by people, I think 60 years and older. And that has a lot of major macroeconomic implications. So I'm relatively bearish, at least in real terms. Like you could have a situation like the 70s in the U.S. or like the 70s through the 90s or the 80s through the 2000s in Canada, where housing basically moved nowhere for a long time. But since you had a lot of inflation compound, in real terms, housing went down. That might be like the politically acceptable way to solve this housing crisis, that people don't lose their retirement or their investment gains from housing, but at the same time housing becomes more affordable effectively. The next question, thoughts on the price of gold and silver. And I'm not going to talk about specific investments here, so you contact me directly for those kind of questions. What do you think are realistic steps the government can take to become a better capital allocator? The fact that they can't pass an audit is crazy. Yeah, it is crazy. I mean, the government's not incentivized to be a better capital allocator. They're incentivized to reward the people who vote for them or help them get into office. And that's going to be substandard allocation. Like, if you really wanted the government to be good capital allocators, the whole cabinet should be former financial portfolio managers. I mean, I'm only halfway joking there. Because the pension funds seem to, at least especially like Canadian pension funds, seem to do a decent job at allocating capital. But it's not the government's job to be allocating capital. The market does better at allocating capital. It's the government's job more to create rule of law and a stable society and that allows people to pursue their goals and have a functioning economy and a stable civil society. How much the government needs to be involved to ensure that, that's where we have political debates. Can you explain tariffs? They might make things more expensive, but are they better for American companies, and can they be better for the nation overall? Tariffs are a tricky one. Generally, you want less tariffs but it's kind of a pick your poison thing. Tariffs are another tax. And I would rather have tariffs than income tax. Like, the reason why the first 150 years of American history, the tariff was the primary revenue source of the government. And then with the 16th Amendment and the income tax, that switched from tariffs to income tax receipts. And the reason they did that was, one, there was a lot of progressive people felt that the rich should pay their fair share. It allowed the government to grow faster and finance more generous social welfare programs that a tariff by itself was simply unable to do. And that's kind of why, and tariffs, though, they do restrict trade, which is bad for the economy. However, income taxes take away a lot of spending power for consumers, which is just as bad, if not worse, for the economy. So it's kind of a pick your poison thing and where the tariffs are targeted. If the tariffs are targeted at a place where the people who are paying the tariff have no other options, it can be a good source of revenue. However, if there's ways to arb around it, countries will arb around it. The other thing is VAT or income tax. VATs are kind of an insidious form of sales tax where they get you on all the stages of the value chain, and it's usually at a higher rate. And that's the VAT explains why the tax burden is much higher, even though marginal income tax rates are similar in the U.S. or Europe. So, yeah, I mean, if I wanted to pick an ideal tax, I would have property taxes. I think property taxes are the best source of revenue if you had to pick one, because you can't evade property taxes. You either own the property or you don't. And the biggest beneficiaries of property taxes are landowners, and landowners are the biggest beneficiary of a government, because you have a well-run government, you have good streets, you have safety, and then as a result of that, you have higher valuations for your property. Look at the difference of, say, San Diego and Tijuana in real estate prices. They're like 4 or 5x multiple difference. They're both similar placed geographically, climate, otherwise. The difference is governance. So that's why I think that property tax, in theory, would be the best way to finance a government. I would probably rank it in order of, I'd say, property tax and other excise taxes, number 1, VAT 2, tariff 3, income tax 4. That's if I had to rank the taxes. Can REITs be considered a store of wealth, or is that an improper way to categorize them? Of course they are, because a REIT is essentially like a piece of property split up into shares. Like a stock is a company split up into shares. A REIT is just the same with real estate. I'm not going to get into specific REITs for investing on here, because that's not what I do on this channel, but that should be enough to answer your question. What are a couple of economics and sociology books you can recommend? There are so many that I could talk about on this. Like, it depends what specifically you want to learn about in economics. The problem is I've read so many of them, I don't really remember them off the top of my head. I'm not like What If Alt Hist, who has the same 5 to 10 books he talks about in every one of his videos to show that he's well read. But like, yeah, that there's a lot of good ones. Give me more detail on what specifically you want to learn, and maybe I'll do a video about economics books, because I'm honestly they're not coming to the top of my head right now. Sociology, I don't really read that many purely sociology books. Like, sociology is something you kind of gain insight on just by learning about other topics and just interacting with the world. But if you want like a sociology book that I bet this audience would find interesting, it's Old Money by Nelson Aldrich. I've mentioned it in a lot of the comments, and I did a book. I did a 1 minute book review, and actually all the books in the 1 minute book reviews playlist I think are a good place to start for finance books. But Old Money by Nelson Aldrich talks about like the social dynamics of old money in the 19th and 20th century, and just how they think differently, and how they view the world. And a lot of what I read from that kind of gave me some of the basis for some of these old money videos. Okay, how about Road to Serfdom? I read Road to Serfdom when I was in college. It's a good book. I mean, it is the danger. That is the left tail event. That if the government continues to abuse its power and projects it that way, that's where we could end up. It's a good read. I recommend it. Nassim Taleb, I've read Black Swan and Anti-Fragile and Dynamic Hedging. They're all interesting books. Dynamic Hedging is like, if you want to learn how to trade volatility from a non-directional perspective and using shares of stock to delta hedge your position, that's the book to read. It's very complicated. It's very deep. Like, I consider myself a pretty strong reader and have good reader comprehension skills. And I had to read that book 3 or 4 times because it was tough. It's a very difficult read, but you'll learn a lot if you really want to learn about options from trading from like a professional market making perspective. Then if you when it comes to the other books, Black Swan and Anti-Fragile, they're interesting, but he's very verbose. You could probably summarize his books in a lot shorter way. There's a few key concepts that are important and it makes you think. But I think that they're both good books, but I think you can read the Blinkist summary and get a lot out of them that way. Next is I got a super chat from Mr. Stonks where thank you for that. I don't see any question on here, but thank you for the super chat. I appreciate it. What are your thoughts on Dalio's changing world order due to China demographics? I did a 3-part video series on that, Monique. It's in my archives. I did that a couple of years ago, and it took me over 3 hours to make it. So I'm not going to re-explain it here. But I agree with some points that he has, and I disagree with some points that Dalio has. But yeah, thanks for the support. And that's watch the video on Dalio that I did already. Let's see. Let me go scroll up to see if there's any other questions. I think I missed a bunch of them. How is France going to get out of their debt hole? Their deficit is 5.1%. Well, they're going to get out of it the same way the U.S. would get out of it, except the problem is the euro is a bunch of countries, and so they'll have to get the entire eurozone. And Germany recently abandoned austerity, so I think they might do it. Why do you think Draghi held rates at negative in QE when there was no recession? It was to protect their bond markets. The ECB will protect their bond market. That's why they can't raise rates as high as the Fed did. And that's why their credibility isn't as good as the Fed, because people know this about France, Italy, Spain, Portugal, Belgium, all of them except for like Germany, the Netherlands, Finland, and a few other responsible countries are all in the same situation as France. So, let's see. Okay, Realm. Hey, Nick, longtime fan, about to begin the NYC investment banking recruiting cycle in MBA. Any advice, non-finance background? I never pursued a career in investment banking. I probably read too many horror stories on Wall Street Oasis and didn't really want to burn for 100 hours plus of work. And I was just, from an intellectual level, I was just more fascinated with the buy side. And so I went straight there. So I don't think I'm the one to ask about investment banking. Let's see. Okay, you said the price of crypto is up to human imagination. Isn't it the case for stocks, for example, where there are multiples of P ratios over 1,000? Yeah, there's some with infinite P's that have negative profits, the same dynamic. And the thing is, once those companies actually do deliver in earnings, then they're held up to the benchmark of a normal company, and that's when often the party ends. And you're basically trying to predict that with crypto, except crypto doesn't have an eventual endpoint. And some of these companies do deliver, like Amazon. So it can happen. Sometimes they work. But yeah, in general, with these companies with the P ratios of 100, they're betting on potential growth of the company. But you can see actual benchmarks that they need to hit to continue the investment to make sense. There is no benchmark crypto has to hit. It's faith without faith in what? What's the event that's going to happen? The world's going to end and everybody's going to switch to using Bitcoin. How do you dynamically hedge short options positions? Read Taleb's book, Dynamic Hedging. That's my answer to that question. It's funny how these answers kind of start to intersect. Let's see. Do I have any more questions? Do you believe the nuclear family has failed? And should we need to move to a more clannish society? Well, Slevin, you kind of sound like Dr. Orion Taraban from Psych Hacks, if you're familiar with other YouTubers on here. No, I don't really think the nuclear family has failed. I think it does help to have extended family live nearby, though. Like, I'm one of 5 siblings personally, and if all my brothers and sisters, when they have families, all live within 20 miles of me, that'd be awesome. It'd help build a good community. But no, I think that the problems that the nuclear family have are more due to economic issues. Like, in terms of, watch my video about moral decay because it's cheap, where I think a lot of bad economic issue structure and economic incentives to break the family are more the issue than the idea of the nuclear family itself. Let's see. Maybe I should do a debunking the doomer on the nuclear family. That's not a question that I have. Is should I bring back debunking the doomer? And if I do, should I do a debunking the doomer of the what if alt hist video that's like, stop coping, your life sucks? It's not purely economic, but that kind of triggered me a little bit to the point that it's like, if your audience is really that dire, then what does that say like about the state of humanity? I just think the world is not that bad. And it's funny, the more doomer content that I see out there, it actually paradoxically makes me more optimistic on the world. And unlike most people, and I did a video about this, why I'm no longer a doomer, living long enough has made me less of a doomer because the doomer outcomes haven't happened fast enough to validate them. Like, people are saying the same things during the GFC when I was in college. That most of these doomer things didn't play out. The world was a lot better than the doomers thought it was going to be back then. And yeah, our lives do suck though. People are suffering most. But there are, of course, there's always people suffering. That's just the nature of an unequal distributed economy. But I don't think that there are people are not suffering. And I'm not that much older than you guys, to be quite honest. And yeah, I've had my own financial difficulties, just life as an entrepreneur, and graduating from college during the GFC. So it's like, I think if you have the skills and the ambition, you will make it. And maybe I'll do a video more of explaining that. But that's the lesson I want to let everybody know, is that if you have the drive and you have the willingness to kind of do something out of the box or have something that that society values, you will make it. And also the thing that the doomers have, it's a lot easier. That's the thing. The floor is a lot higher now because of a lot of certain cultural and economic incentives structure in society. But thriving is harder. That's what I would agree with the doomers. It's a lot harder to get to upper middle class level that like my parents were able to get to in the 80s and 90s than it is today. It's a lot easier to do that back then than it is today. But the floor is a lot higher, and that gap between the floor being easier and the upper middle class and above level being harder is very demotivating for people. And I see where that's coming from. Do you think people's social contract with their government has always been about stability. Seems like Rousseau had a more ambitious view on their agreement. Partially, but also due to the fact that people didn't believe in the divine right of kings anymore, you needed to have some sort of reason for people to participate in society. Like, you have to have incentives to get people to cooperate, because if there's no benefit for people to cooperate in society, society's going to fall apart. You need some sort of social contract. The thing is that people misunderstand is that not everybody has the same standard English Western model of social contract. Every society has a different social contract. And I talked about this in my videos, the American dream versus the European dream versus the Chinese dream several years ago. It goes more into this. What do you think is the real reason behind letting so many immigrants in the U.S. recently? Do you think it's really a short-term goal to get votes, a longer-term goal, or something else? EC is a EcoPetrol. I don't really follow EcoPetrol. I'm not going to talk about civic stocks, Matt, but yeah. I've not been following it. What do you think of the real... Okay, so... there's a few reasons for it. I did talk about this a little bit in the old money videos, but there's some people who think misguidedly, oh, they have a demographic inverted pyramid. We need to bring in immigrants to prevent society from collapsing on its own weight because there won't be enough young people to pay off the pensions of the old. So that is the what's it called? That's kind of a lot of the intellectual class argument for immigration is like, we need these people because our native born people are not replacing the population fast enough to keep growth going. And I think that's a very superficial way of looking at it. That's what led to the refugee crisis with Merkel in 2015. You have to think of quality and cultural fit as well as just quantity of immigration. And that was just blatantly being ignored. I think a lot of it also is to keep certain businesses going. Like, if you didn't have this surge of immigration, we'd probably have a huge vacancy problem, like with apartments. You'd have consumption going down because people's budgets are tight and they can't spend enough money. So companies like it because, especially big corporations, they have more consumers to buy their products. You have a lot of companies on the employment side like it because immigration lowers the wage curve as a whole. Like, if you have to pay, if the minimum market wage, say for example, no matter what the federal mandated minimum wage is, just if the market has a minimum wage at subsistence level, let's just say that's $20 an hour, and therefore if you are more skilled than the minimum wage, you're going to demand a higher wage, and that trickles up. However, if you have immigrants who are willing to work for, say, $10 an hour, then that brings down the floor, and therefore that spread that the higher skilled person has over the lower skilled person, if that stays constant, their overall wages are going to go down. So immigrants overall bring down the wage curve to anybody who's not a business owner. Because every wage is effectively, it's kind of a supply and demand dynamic. And so that's something. The other thing is that there are some more conspiratorial things, I think, that could be driving the immigration debate, but I really don't want to comment about them on this channel for particular reasons. But there are certain political factions who do not, and if things get to more a certain environment, that are going to need more support, and immigration helps that. But I think it's more really to do just with people being afraid the economy will collapse if there's not enough consumers, and a lot of wealthy business interests think that wages are too high. And then there's also the idea that you can recruit and replace your voters as well for certain political groups. But like, I wonder how the immigration debate would be different if the immigrants' kids primarily voted for right-wingers instead of left-wingers. that's some food for thought. But I think it's more to do for economic reasons than purely electoral. Immigrants really can't vote. It's their children who can vote in birthright countries. In places like Europe, where they don't have birthright citizenship, it's their kids can't even vote. So I don't think it's driving. It's not because of voting. It's because they want to be able to continue to finance their social security and their welfare states, and they don't have enough young taxpayers to contribute. So yeah, I don't know. For my European viewers, when are new immigrants and their children able to vote? Because I know they don't have birthright citizenship. So and how easy is naturalization? I know in Switzerland, where I'm most familiar with, it's very difficult, but it might be easier in other countries. So yeah, let's see. We've been going on for almost 2 hours now. Do we have any other questions before I go? No, I think that's okay. All right, so actually I do have some more questions. I was about to stop the stream. What do you think will happen as a result of the wealth transfer from boomers to their kids? I think I'm going to do a video about this. I actually had a friend of mine who I met for breakfast today ask this very same question, and this has been a very popular topic discussed among the investment advisory community, because there's a lot of possible things. There's some boomers who just don't want to give money to their kids at all. They prefer giving to charity. There's a lot who are going to spend it. So that's another dynamic. If they all decide so, and then there's others who are going to pass it down, and people are living longer, particularly wealthy people. So people who inherit money in their 30s and 40s are probably going to inherit in their 50s and 60s, but. Yeah, I got to do a video about that, honestly. And then, do you think 100% inheritance tax would be effective in growing the economy by motivating people through class mobility? I don't really like the idea of 100% inheritance tax, because you're already taxing people on income that they paid taxes on before. If you want to have a high inheritance tax, get rid of the income tax. Hey, look, you can grow and accumulate all your money you want, but when you die, you're giving it up to the state. If anything, if there were what this would do, 100% inheritance tax would boost the economy, but for a different reason. It would boost the economy because people would just try to spend everything before they die. And that would be potentially pretty inflationary, actually. So that's a risk, and you complain about nuclear family and family values collapsing. If you have 100% inheritance tax, that would probably be very anti-family policy. So that's if families can't really build a legacy and can't build generational wealth, it also prevents people from being able to build a source of wealth and a source of being able to sustain themselves away from dependence on the state or a corporation as a source of employment. And I'm generally for things that empower individuals to operate outside of a corporate and government system. So yeah, I think it would create more dependence on people working for government or big companies, and I think it would concentrate power more to the political class, and it would cause a lot of short-term consumption. I don't think it could ever happen. It's just the political will isn't there. And then is national divorce inevitable in the U.S.? How does it play out if it does? No. I think that national divorce will not happen in the U.S. if there was to be some sort of conflict between the partisan classes, it'll be more like a, sad to say, like a Russian civil war or the Yugoslavic conflict. There's not enough people concentrated in one area. This isn't like the 1860s where you had the pro-slavery South and the anti-slavery North, and the lines were pretty cut across state lines. It doesn't work that way. Even in California, where I live, 40% of the population is conservative leaning. And in Texas, which is supposedly a red state, 45% of the population is Democrats. And Florida, the same thing. So this idea of national divorce is silly just because of that. Like, just because some states are consistently red or consistently blue on a map, like, if they consistently vote 55% of the population votes, that's still only 55% of the population voting a specific way. And so that's the answer to your issue, is that I don't think there will be a national divorce. And the problem is that paradoxically, I call it the prosperity theory of economics. And I talked about this in my Iceberg of Economics series, which I think all of you guys should watch. And so, because I go into a lot of the more esoteric stuff, and the idea of when it comes to I talk about the prosperity theory of economics, is that when a city does well, it attracts younger people and people down on their luck who are more likely to vote for socialist policies. And so all these inflows of new people change the voting habits and inevitably make the city less prosperous. And then as the city declines, you've got what's it called? Those same people who are moving into the city voting for the socialist policies move out, and therefore it becomes more free market, more conservative, until it fixes its way. And the cycle repeats. And somebody who has more right-leaning political views, it's probably depressing, because the only way that you'll ever get your economic reforms you want is that things have to go bad. And that's kind of really how it works. Like, now you're seeing all this migration out of California. It's probably when California start turning around its economic policy, because they're going to be forced to. So that's my view on that. And look at Michigan and Wisconsin as examples. They used to be the most progressive blue states in America, and then they ran their economies to the ground relatively, and they were forced to get more competitive, and now they're swing states in the elections, and their economies are starting to improve. I think this is what's going to happen to New York and California and Illinois over the next 20 or 30 years, and then you'll see something like Texas happen. And also, yes, the commenters are surprised I live in California. Not everywhere in California is a disaster. There are actually nice places to live here, and people who are not aligned necessarily with the policies in Sacramento. Let's see. So yeah, I don't think there's going to be a national divorce. And also, a lot of the strategic valuable areas to the country happen to be in blue states. The red states may have the natural resources, but the blue states have the coastlines, and they have the cities, and they have the technology. And I think our country kind of works together in all of this. So yeah. Let's see. Any more questions? If not, I'm going to wrap things up. Yeah, I've been running this for about 2 hours. I think I'm going to, what's it called? Yeah, I actually got some actual questions from somebody who is a viewer but knows me personally, and so kind of texted. He says, how can you say that Powell was a better central banker than Bernanke. Well, I think that Powell was better because Powell was actually willing to not use QE to beyond its useful life. I mean, you can argue that you needed it for 2009, but the extension of doing it into 2012 and 13, I think, was the mistake that created a lot of the wealth inequality issues and the asset inflation issues, and just created money too loose for relatively how healthy the economy was. And yeah, that's my main critique. I'm against QE3, whereas I think Powell actually has done, I think, a better job. But I'll talk to that person. And then let's see. So I got some more questions. On top of this, what is the most irreconcilable by urban, rural, subsistence, owner class, generational? Yeah, that's a tricky one. Like, I think a lot of it has to do, I think it's education relative to income. People who have educations higher than their income would imply are on one side, and people whose income is higher than what their educations and prestige think they should be is on the other side. If you look at the modern base of the Democratic Party in America, is people who are mostly have high levels of education or high levels of social prestige, working at either prestigious Fortune 500 companies or NGOs or prestigious government roles, but their incomes are not high enough relative to the level of social prestige they have. And it's vice versa for right-wingers in America. It's people who are small business owners, people work in the trades, or sales professionals, or Wall Street people, or others who have like bachelor's degrees or lower most of the time, or MBAs maybe, who earn a lot more income than the prestige of their degrees and their resumes that society will deserves. Like, this culture kind of developed in like high schools among millennials, that like everybody thought based on what your grades were in high school and what college you got into is where you belonged on the social class hierarchy. And a lot of people, like 40 and others, simply haven't grown out of that. And or have just absorbed that mindset. And I kind of had that mindset until I was in the working world long enough to see that you didn't have to go to Harvard or to Yale or to top prestigious schools to be successful. So yeah, I think that's the big thing, is that it's just like it's education relative to prosperity. So is the biggest, I think, political divide. I think there are some generational components as well, but that's the biggest one that, and I don't know if people are talking about it. What is the priority for the next president to quell domestic social tensions or maintaining increasing U.S. influence internationally? That's a tough question. I'd have to think about that one, to be quite honest with you. Has anybody ever told you look like Bashar al-Assad? No, nobody has. I don't think that's I don't take that as a compliment. If things need to break to continue to growth, could leveraging be part of the plan? So basically, just try to rack up so much metaphorical credit card debt that you're forced into bankruptcy. No, I don't really think that would work, to be quite honest. Yeah. Then that's let's see. Do I have any other questions? If not, I'll give you guys about 10 more seconds to ask me a question. But until then, I just like to say thank you. I mean, we're going to be doing a lot of cool things with this channel. I have a lot more content coming. I'll probably do some more old money videos and do some debunking the doomer. Maybe I'll bring back the economic futures. And I'll do some other stuff too. So that is, and I always like your suggestions for topic ideas. And I want to try to do the more in-person meetups with you guys. And I'll probably start posting surveys to see where clusters of the subscribers are concentrated. And maybe I'll host meetups in your city. So stay tuned for that. And if you like to support the channel, everything else. Should I quit my job on Wall Street to work remotely? Again, I don't answer personal questions on here. What's it called? But it depends what you're going to be doing remotely. Depends what job you have on Wall Street. That's not a very good question. I don't have a good answer for you. But yeah, I think I'm gonna. You have a 4-hour commute each day. Why don't you live closer to where you live? To where you work, I mean. But yeah, that's brutal. I mean, so I'm gonna wrap it up here. Thank you for watching, everybody, and yeah, I'll do. Also, how many more of these should I do? I'm gonna do one at least at 25,000. But if you like this, I might do it more frequently. But yeah, thank you everybody for watching, and have a great night. And